The Intelligent Investor Explained 10-Minute Guide to Smarter Investing. What's up, future millionaires? If you want to invest smarter and grow real, lasting wealth, this is the video you need, the host said excitedly. Today, I'm breaking down The Intelligent Investor by Benjamin Graham, the book Warren Buffett called by far the best book on investing ever written. Stick around because I'm not just summarizing it, I'm giving you the practical takeaways you can apply today. The host reminded viewers to like, subscribe, and smash that bell, especially if they were serious about building wealth that lasts. The host explained informatively, "This isn't your average get-rich-quick investing book. Written back in 1949, The Intelligent Investor is all about creating safe, steady, long-term investment strategies." Graham introduces the idea of value investing, buying stocks when they're undervalued and holding them patiently while the market catches up. Reassuringly, the host said, "Think of this book as your investment Bible. But don't worry, I've trimmed the 600-plus pages into 10 minutes you'll actually remember." Informatively, the host continued, "First, Graham says you need to know what kind of investor you are." The host described the defensive investor as passive, someone who doesn't want to analyze stocks, prefers index funds or bonds, and focuses on preservation rather than excitement. On the other hand, the host detailed the enterprising investor as someone who actively researches, looks for undervalued stocks, and buys when others are scared. Cautioning viewers, the host said, "Most people think they're enterprising, but behave like gamblers. Be honest about which one you are. Your strategy should fit your temperament." Engagingly, the host introduced one of the most legendary metaphors in finance, Mr. Market. Descriptively, the host said, "Imagine you own a business, and every day your partner, Mr. Market, offers to buy your shares or sell his to you, but he's super emotional. One day he's hyped, the next he's depressed. His prices are all over the place." Advising listeners, the host explained, "Your job, ignore his emotions. Only buy when the price is right. That's the essence of value investing. Buy low, sell high, and don't panic." Emphatically, the host highlighted one of the most powerful principles in the book, margin of safety. Informatively, the host said, "This means only buying stocks or any investments when there's a buffer, when the price is well below its actual value. So even if things go wrong, you're still protected." Illustrating the concept, the host gave an example. If a company's intrinsic value is $100, you might only buy if it's trading at $70. That $30 gap, that's your margin of safety. It protects you from unexpected market drops or mistakes in judgment. Forcefully, the host explained, Graham makes it crystal clear. There's a difference between investing and speculating. Contrasting the two, the host said, investing, based on fundamentals, analysis, long-term thinking. Speculating, guesswork, emotions, hype, short-term wins. Advising further, the host cautioned, most people think they're investing, but they're just speculating with a suit on. Don't chase trends or time the market. The Intelligent Investor says to focus on value, patience, and discipline. Strategically, the host shared Graham's recommendation to keep a mix of stocks and bonds in your portfolio. Advising viewers to adjust based on conditions, the host said, when stocks are expensive or volatile, increase bonds. When stocks are cheap, lean in. Suggestively, the host mentioned a common allocation, 50-50, but adjust based on market conditions and your risk tolerance. Cautiously, the host warned, diversification also matters. Don't bet your future on just one or two stocks. Spread your investments across industries, sectors, and asset types. Insightfully, the host noted, more than anything, the Intelligent Investor teaches us the importance of psychology. Motivationally, the host said, markets move because of fear and greed, not just numbers. Your job is to stay rational while everyone else is emotional. Quoting Graham, the host reminded, the investor's chief problem, and even his worst enemy, is likely to be himself. Encouraging viewers, the host advised, so what do? Stick to your plan, don't panic sell, ignore the noise, trust your strategy. Recapping, the host summarized the 7 timeless takeaways from The Intelligent Investor. 1. Know your investor type. 2. Don't follow Mr. Market's emotions. 3. Demand a margin of safety. 4. Avoid speculation, be an investor. 5. Diversify and rebalance. 6. Use bonds wisely. 7. Master your emotions, not the market. Convincingly, the host concluded, "That's it. Not flashy, not sexy, but these principles work, and they're how Buffett built a $100+ billion fortune." Interactively, the host asked viewers to drop a book emoji in the comments and share if they are a defensive or enterprising investor. Encouraging, the host said, "Like this video if it helped clarify some things. Subscribe and turn on notifications because next week we're breaking down One Up on Wall Street, the book that'll show you how to pick winning stocks before Wall Street catches on." The host closed by saying, "Until next time, stay disciplined, stay invested, and stay smart."